still on PLLI Financial Literacy podcast, and I hope it's a wake-up call for someone, on this call. But I want to ask, the truth is, I too want to make money.
Yes, we all do.
And the goal is not to make, a one-off hit.
No.
That's why even for those that are into fraud, they have to keep going.
Yeah.
Those are even into legit business. Somebody will say Dangote is still trying to make money.
Yes, so.
Right? The grind is still on.
Yeah.
So I think that there are two categories of people. The goal is to make money and keep it sustainable. Yeah. She spoke about transgenerational wealth that can be passed on from generation to generation. I wish my dad, not to drag my dad on this call, but I wish someone had left me some transgenerational wealth. So there are two kinds of people. Yeah. There are the wooden spoon people. They don't have much. They're doing a job. They earn 100K, 200K, 500K a month, and they want to know how to start on their journey. So they're asking questions like, if I have 10K, what do I do? If I have 100K, what do I do? If I'm able to make it up to 1,000 USD, what do I do? How do I start? Then there is the other set of people, the trust fund people, and the silver, the Depo babies. So we even see that these guys are also in a dilemma. Yeah. 100M inheritance money. What next? And a lot of them have lost. A lot of them has lost hundreds of millions into billions of money. Yeah, true. That was left, on the table, and it's gone. And I even know that, for the wealthy, that's they are currently hoping and praying and training that they don't have children that come up and squander their wealth. So the question is, if I'm lucky and someone has left me 100 million on the table, what do I do? So I don't know if you understand.
I get you very well. So you see, investment, the funny thing about investment is not straight line. So investment is usually tied to, there's something we do with profile clients. It's tied to your investment objectives, your financial goals. So investment is not straight line, but based on your objectives and your financial goals, we can now begin to say, okay, we can start a portfolio in this line. Okay. But for someone like the wooden spoon you gave example of, what you first want to do, right? In fact, not even for the wooden spoon, for everybody that you give example, what you first want to do is first and foremost, preserve what you have. That's goal one. Okay. Retention. So I have a 10,000 naira. Mm-hmm. I want to preserve this 10,000 naira. Yeah. I don't want anything to happen to this 10,000 naira. Or I have 100 million I inherited. I want to preserve this 100 million, right? Now, the next thing you're going to look at is after preserving this 100 million or 10,000 naira, I want to grow this 10,000 naira. Or I want to grow this 100 million, right? So I'm looking at capital gains, capital appreciation. I'm also looking at returns on investment. That's level number 2. Now, the third level after that is you're looking at, I need to sustain this growth for a time period. So there's a time horizon, right? That time horizon has to do with, am I going to sustain it? Am I looking at sustaining it short term, medium term, or long term? For someone that inherited the wealth, he's thinking, I want to sustain it till 3rd, 4th, 5th generation. For someone that is starting with 10,000, I want to even sustain it. First, take care of me, then now start taking care of my children, and I now want to create generational wealth, right? Now, the last but not the least is now, I want this to be passed on. So you sustain, then you pass it on. And when you put all this together, it tells you what kind of investment move you should make. When I mentioned the second step, I said capital gains, returns on investment. When you mention capital gains, you're looking at taking some level of risk. So obviously, if someone has 100 million, I won't tell you to put the entire 100 million in something risky. I won't tell you to put the entire 100 million in capital markets because it's volatile, right? I won't tell you to put the entire 100 million in some, investment that has very high risk. So we'll teach you how to apportion your portfolio to suit your own financial goals and objectives. But when you talk to a lot of clients, the first thing that they want from the basic is that first and foremost, my 100 million or my 10,000 is safe. Nothing happens to this. So you need to preserve that wealth first. So wealth preservation. I don't know if that helps.
It does, but how?
Beautiful. So once we have sat down and we have apportion all that and we say, this is exactly what we're going to do. Then we start looking at outlets, investment outlets. There's so many investment outlets. You have investment outlets that are low risk. Low risk investment outlets are money market instruments. When I say money market instruments, I'm referring to the treasury bills of this market. Okay. I'm referring to fixed deposits. I'm referring to money market funds. I'm referring to mutual funds. I'm referring to mutual funds. I'm referring to commercial papers. I'm referring to bonds. And how do you get into the space? You need to talk to your banker or an investment banker or your wealth advisor, or you can call us. And then we'll tell you how to cross this barrier to entry, how to implement and execute it. Like we had in the session today, we gave a general outlet, which was a mutual fund, the money market fund. That is an outlet that you can just step into with as low as 10,000 naira. At least you can start with 10,000 naira in the immediate. So we call it start small, small. You can start with 10,000 naira in the immediate, and it handles the first thing I said. It preserves your wealth. Nothing happens to your 10,000 naira. It gives you returns on investment. You might not be crazy, but it gives you some. So once we have set out your investment guidelines and your investment objectives, after asking you questions, right, then we can now begin to say, after this, you build up your wealth, and we begin to move to this, begin to focus on this. We can say, okay, part of this fund is going to this low risk investment. Part of this fund is going to be apportioned to medium level risk. Part of this fund is going to be apportioned to high level risk. Part of this fund is going to be, the medium level risk is going to be medium to long term. The volatile one, is going to be long term. So anybody that wants to play in the capital market, we always advise, if you want to play in the capital market, it's always good for you to be, I give an example. I said I bought a stock at 26 naira. Yeah. And I bought it how many years ago? Although it was just small money I put there. Between then and now, the stock has moved from 26 naira to 230 naira per stock, right? So if you see that's within like about 3 to 4 years. That's long term. Long term. So if I had taken out that stock, maybe in year 2, I don't know if that makes sense. So how actually first starts from you. You have to sit down and know your own investment objectives. We know where you fall into. That's what I'm saying. For investment, it's not a straight line. There's no straight line investment. I don't know if that kind of helps.
Yeah, it does. So Taiwo, I have 100K.
Yeah.
And I intend to start, take action right after this class.
Yes.
But I need to know how.
Correct. Okay, so like I said, right, besides, asking you the right questions and profiling you and, helping you to holding your hand through an investment process, I think the first thing I would recommend would be a mutual fund. Because for the 100K, you'll first be looking at, preserving that 100K. And I think I asked you, the question I asked earlier, how long are you looking at holding it for? Maybe it's disposable income, so it can be 30 days, it can be 90 days. So the first thing I recommend would be the mutual fund. For you to do that, basically, I'll just tell you to go to our website on invest.commercialpartners.com. Click on it. When you click on that page, click on our capabilities. It's going to take you through, you're going to see who we are, about us. You can go around all that if you want to know more about us. But if you want to get the call to action, click on our capabilities. When you click on our capabilities, click on investment. Once you click on investment, you're going to see a call to action which says get started. Click on get started. It's going to take you to a login page. Now, at the end, at the lowest bit of that login page, you will see a call to action which says register here. Please click on register here. It's just about 3 steps. Those 3 steps, it takes you to the first where you give us your bio data. After you've given us your bio data, it tells you to upload the regular, KYC requirements, which is your valid utility bill, your passport photograph, and your ID card. And then the last stage, it tells you to upload your picture. Once you do that, we create an account for you. We give you a login detail, and then we'll reach out to you. You fund the account, and then your investment actually starts within the immediate. This can all be done within about 15 minutes of you going to our website. Yeah, so.
Thank you. So before we let you go, 2 real questions. One is, what is the implication of the current tax reforms on our ROI? Because you had also said that, we knew what, the percentages were, but now the government in Nigeria, by the way, has come with some new tax reform. So how does it affect ROI? Okay,
so I always tell clients that it's very important that you ask, whatever investment you are getting into, it's very important you ask, is it net or is it gross? All right. Prior to now, you have investment rates are quoted in net, it's quoted in gross, right? But some clients just assume that it is net. Now, what does that mean? Net is net of withholding tax. Gross is inclusive of withholding tax. So what is happening now is whatever income you earn on your investment, for example, you get a 16% or 17% per annum. And let's assume what you get on that is, let's just assume your return on investment is about 20,000. So there's what we call the statutory withholding tax, which is 10% of that income. Now that 10%, right, is taken from, so on 20,000, 2,000 is going to be taken. So when you look at that, your effective yield or your effective return on investment is 16% less of 10%. I think that should give you about 14.4. So your effective return is 14.4. So whenever you're talking to any investor and they're telling you the rate, please ask them, is it net or is it gross? You need to know. Because now someone is telling you 16%, but really what you're getting is 14.4, right? And now there are other outlets you can actually look at. Long-term, the federal government has tried to push investors to long-term investments like bonds. So bonds are now the only instruments that are not taxed. So if you're looking at long-term instruments like the government bonds, the savings bonds are quite common. There's no tax on those instruments. But every other investment instrument, please, you should be expecting to pay some form of tax. So negotiate your rates well. So for example, if you tell me to negotiate a 14.4, I will ask them, is it gross or is it net? So I can negotiate a 16% net. So you have to take that into consideration when you're talking to your wealth advisor.
Okay, that's fantastic. Don't get shafted. Right. You need to know your numbers. And here goes the reason why you need this financial literacy. I need to be well informed. I'm going to ask a final question. Still on numbers.
Yes.
You know how some people just think if you have low risk appetite and you have some money, you can put it and then play the long game. Mm-hmm. And the assumption is if you have enough patience and you're going to wait it out, there's light at the end of the tunnel.
Yes.
But it's not always so.
Yes.
Reason is that sometimes inflation gets to impact, your investment. Mm-hmm. Actually, the wise way to invest is that you're monitoring and controlling. Very sometimes true. You have to, sell. Sometimes you have to short. You have to buy. You have to reinvest. You just need to watch the trend.
Yes.
And ride the trend.
Yes.
I just wanted to speak, a bit to that. How does inflation play out and affect, an investment?
So for me, I think one of the best ways you can, sweat your portfolio with inflation is portfolio diversification. So like you said something, you start your conversation with low risk investment, long-term low risk investment. So if all your investments that you have is long-term low risk, you will get low risk and long-term returns, right? Nobody is saying it's bad, but you just get the basic. So if you want to be able to beat or really, really cushion the effect of inflation, your portfolio should be very well diversified. And you can diversify a portfolio even with a 10,000 naira. There are funds there are mutual funds you call balance funds. Now, a balance fund is a fund that has equities, fixed income instrument bonds, and also has money market instruments in it. So, for example, I give that balance fund a 10,000 naira, right? Or a fixed income fund a 10,000 naira. What it means that 700 of my, or maybe say, maybe 3,000 of my 10K is going to treasury bills. Another 3K is going to, say, bonds. 2K is going to maybe commercial papers. 1K, or is it 2K that is left? The balance is going to equities, local equities. So you see that's a well-diversified portfolio. So you're balancing it out. So the best way to beat inflation and get returns is to sweat your portfolio. And you also said something, monitoring, reviewing, and revising your portfolio. So when you do that, and you keep monitoring your portfolio, you can tell when to put more here, add more here, add more here. So you need to be able to have a well-diversified portfolio. I gave an example earlier on that if you're an investor that only buys, your only investment is land, you buy land, it's not bad, right? But you might have liquidity issues because lands are these fixed assets. So You can't say, I want to quickly convert land to cash. But if you're not investor, I say, as I'm buying land, I'm also buying some other liquid assets. So it's portfolio diversification. That's the best way to sweat your funds.
Thank you so much, Taiwo. So if you're listening to all of this conversation and you're trying to figure it out, you're wondering what are they saying, then you are our primary audience. The financial literacy course by PLLI is just for you. And maybe if you understand, but yet you're yet to take action, it's also for you. And we'd like to implore you, to come and take action, take the course, and be a part of, the PLLI commercial family. And we'll see you at the top. Have a lovely day.